Hey guys, this is Bruce Marshall from Simpler Trading with tonight's video update of the market for Friday, May the 4th. And if you were trading today or watching today, you know that we came out of the gate this morning on the payroll numbers, and which I thought were pretty good. Obviously the market, they were 164,000 versus 135, and initially we had a pretty good drop. I was watching the futures pre-market and everything kind of dropped, and then we started moving higher, and the foot never came off the gas the whole day really until we hit here. And then this was just, I would suspect this is probably some people taking, some chips off the table after the big run that we'd had in the last couple of days. But all in all, very, very positive day. So, you know me, I like to look at different time frames and kind of see where we've been, and helps you see where we might be going, right? So we take a look at this. We came off this low here, 25.94, which turned out to be a pretty important pivotal point, because we held that, and then this just lit the fire, and we went, that's a massive 75-point move in 2 days, in the S&P. That's pretty impressive, right? And as we know, of course, down here we had a 60-point drop in in hours, here into the close and here into the open. So we've had these crazy moves, all the way down, all the way back up to the same place, and then we break out a little bit higher, right? And in my bias write up this morning, I put, you need Dramamine for this market, because the whipsaws can be pretty fierce, back and forth. And the thing about it is, this is great for scalping, but you got to be on the right side or you will get scalped, right? So you just got to be real careful. But what I want to show you is, let me pull this over there, and I got these charts from Carolyn, and this is the ES on a 120-minute chart. And I just want to show you where kind of what I'm looking at. If I can get my chart back up, there it is. Okay, sorry, there it is. All right, I don't know if you can see it down there, but this level here, the 1272 is 25.94, and we held and bounced, straight off that. 25.94 is right there. So that was pretty impressive, right? That we bounced off that. Now we have since, come all the way up here, and we've cut through a lot of overhead resistance on the way up to getting to that. You see that 2670? And again, see that 2670? Right there, 2670. So the reason that I'm showing you that, the reason that that's important, is so far we hit that and kind of bounced off. We went basically vertical up here, hit it, and have bounced off a little bit. So what happens? This is what's going to set us up for next week, right? Because if we can make another run and break through here, obviously we have higher levels to shoot for. And kind of generically speaking, there's 2686, I believe. There's 2700. There's 2717, I believe, here. And I'll show you kind of what those levels look like to give you an idea. So if we take this chart and back it out 10 days, we have this level up here. And that's the 2686 level I was talking about. And if we go out to 20 days... obviously we have this level here, and then we have this level up here at the 27, I don't know if you can see that or not, 2717. So basically, kind of generically speaking, the next between here at 2670 and I would say all the way up to 2720, very critical for the success of this rally to continue. There will be multiple levels of resistance as we go up through here. And we could, like this rally off this low, we could just slice right through these and keep on going. That's probably our best case scenario. And if we do that, then we're off to the races. We're back in business and all that kind of stuff. If we start hitting these levels and bouncing back off, it's going to be more of this bounce off, you know, and this may take us lower and lower. Unfortunately, we don't know, right? And let me back it out even a little bit further. Let's go out here to the year chart. Of course, you know, again, if we can clear some hurdles, we're going to get up to higher highs and better levels, and we'll be off to the races again, which we all want to get kind of back in a more at least predictable market, right? The unknown, the wild card, is if these levels fail or there's some tariff, trade war, something or other comes up, Fed, inflation, treasury yields, something come up and we go this way, then we have to realistically think we may test some of these lower levels again. I think this is now a less likely choice after this big run we've had, but we have to be aware of that, right? So, you know, what do you do with that? Well, I'm not flat, but I'm very, very, very light on trades. I took some off. I'm just kind of very lightly positioned going forward because next week we'll, you know, it seems like every week we're at a pivotal point in the market. Well, we really are now because, you know, this could be the start of the next run higher, or this could be another in a series of the last several weeks of, you know, test and fail, test and fail, test and fail, and takes us back down. So, you know, the best thing I can say is to stay light, stay nimble, you know, pick your entries very carefully going forward. You don't want to miss the ride, you know, obviously, but at the same time, you don't want to get, you know, run into the brick wall. So know where those levels are, and the levels will change. Obviously, next week we'll know. We'll look at fib levels, we'll look at voodoo lines, so forth. But just be very aware of those levels, and if we can get through them or we don't, then that can give us an indication of which way the market might go. So for now, I'm staying light, I'm staying nimble, and we will see what next week has in store for us. So I hope this helps. Everybody have a great weekend, and we will see you next week. Thanks a lot, guys. I appreciate it.